What's up? I'm Dan Fredenberg, and this is another chance encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon.
I understand that there are power lines that are getting kind of close.
What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Deepak Mathur. Is that how you pronounce it? Is it Deepak or?
I think go by Deepak Chopra. So,
Okay, all right,
but yeah, Deepak Mathur, right? Math with a UR at the end. So,
all right, excellent, excellent. And I'm glad you're here today. But I gotta tell you, today we've actually got my very favorite audience member watching today. And why is my favorite audience member watching today? It's because this is a chance encounter where I interview commercial real estate syndicators, buyers, sellers, investors, those types of people. And why would I do such a thing? Well, part of it is to gain a documented substantive relationship with investors, which is something that the SEC requires if you're going to get involved in private deals with people. And it's fun, so that's cool. But the other thing that I focus on to make it valuable for you is I make sure that you get to learn how to effectively communicate on the subject of commercial real estate, how a deal works, and that's only 2 minutes, and then how my guest fits in. But before we get excited with any of that, Deepak, do you want to introduce yourself a little bit to the audience, say a few words?
yeah. So hi, I'm Deepak, and I'm from Irvine, California, Southern California. So we're just now recovering from the rains that we've had for the last month, just because California's in a drought and we can use all the water we can get. So I 3 years ago I left the IT industry and focusing on the mortgage on the residential side, where I was licensed in 6 states. Now I'm currently only licensed in California. I also have a active real estate license for California for residential. The reason I formed the RDM group last year was basically to partner with investors, such as the people that view your videos, to raise capital and also invest that capital as equity in multifamily properties to generate passive income. Also have some equity appreciation. Stash some of that away for retirement as well.
Well, that sounds pretty good, and we'll get to these to that motivation there. That's actually the first segment, and before that, though, I have to say, but wait, check your eight. If you can look at the camera and imagine a clock, so I don't mean eight like over there. I mean eight like down that way. You'll see and you'll see if the audience member has clicked the red subscribe button or not, or if it's great. No, it's just a stupid thing I like to say to try and remind people. But the 5 distinct motivations that commercial real estate investors have, I've noticed that everybody has their own reasons, but I find that pragmatically, these are the 5 that really give me an idea of why you're going through the effort of making commercial acquisitions. After all, they can take months to pull off. So some people, they are making their next acquisition because they are preserving their purchasing power. So if you already have a portfolio of assets and the way that you make ends meet is off of the money that you make from ownership, well, then the only reasons why you're going to make a new purchase, of course, you don't want to sell off any assets unless they're basically dead. What you're going to do is you're going to make another acquisition to stave off the inflation and increase cash flow. Or if there's an asset crash, then you're going to want to try and buy at a discount. But this reason here is not my one. My one is trading time directly for wealth. So what that's all about is me, because I've got a background in CRMs, and it's actually the kind of CRM that also accepts credit cards. So it's like an e-commerce platform all in one. I've owned an agency for CRM help since 2011. But what hit me about having a tech job is high salary. And the problem is if you're getting paid in the form of wages or salary, you're paying more tax than anybody else. So it hit me, how can I pivot into something where I'm getting rewarded with deployed capital, AKA equity? So that's what I'm up to. That's my motivation. But a lot of people come to commercial real estate because they're trying to fast track their retirement. But that's a code word as far as I'm concerned. I think that really means they want to take control of their own schedules. So maybe they want to work fewer months per year, fewer weeks per month, something like that. But the next group, it's not that they're trying to take control of their schedule. They're trying to buy their entire hometown. They're ambitious. They've got their eyes on generational wealth to make sure that their great grandchildren never have to hold a day job. And they're great to have on your team because they're going to keep hustling into their 90s. But when it comes to the last group, they're also going to be hustlers into their old age, but it's going to be because they've found a sector of society, or maybe it's the environment or animals or something like that. But regardless, if you're going to make a big difference, there's a financial cost to that. And so some people make these acquisitions to forward their philanthropy, actually. So, Deepak, of those five different motivations, what combination of those would you say describes you best?
You know what I think, Dan? It's a mix of all those things, right?
Hmm.
I was in IT like you, but my thing was I was doing a lot of consulting, so I was never really home. I was always out of state,
Hmm.
and having long-term projects, it's either hotel or you try and find an apartment where you can get month to month, which was sometimes hard to find. Find apartments that were month to month where because a project could be done quicker than 1 year or it could be done in 6 months.
Hmm.
So that was one of the things that when I left IT, that's one of the things that I wanted to focus on. Um, is whatever capital that I have, to invest that for a long term, which will give me some free time and also work with other like-minded individuals, to be able to uh, leverage their income and also have that passive income where they don't have to work as hard. They
Hmm.
can be IT, still have that nice paying job, but then also have that additional income, for that extra 1 week of vacation time, right? Unpaid vacation. It's when you're working, you got 2 weeks of vacation, and then you're done. If anything after that is unpaid vacation.
Right.
So getting some extra passive income with your investments, you can take that 1 week. That
Hmm. Right.
especially being in IT, you're working countless hours, right? Overtime and weekends, and depending on what you do, that
Hmm.
extra 1 week, can come in handy.
And maybe it's because of black swan events, or maybe it's just because of the nature of real estate. But I find that uh, like you, I haven't seen anybody, and I've been watching really, really carefully throughout my life as far as like who actually has been able to discover upwards mobility. And if you don't have a real estate play, or in other words, exposure to real estate, you really, I guess the problem is you just don't get equity multiples. And so, like that's the only way that, time's actually on your side. So even if you're a hotshot IT guy, oh yeah, the numbers don't work out. And I didn't want to do the numbers for a long time because I always felt like it. But that was because I was living in Taiwan with no access to credit. So I wasn't able to, get the time
Well,
value. It was crazy, right?
right. Well, a lot of the IT people that I know, right, they were focusing on single family,
Right,
not so much multifamily. But now, what you can see with the current interest rates,
right.
that now for them to refinance out of the property,
They're stuck.
they won't be able to take any of that equity out,
Right,
right?
right.
So I've always had that inkling of getting into multifamily. But again, right, coming from the IT background, not knowing many people that I know that are in multifamily, uh,
Right.
you
Right.
have to do a lot of digging around. So
Sure, sure.
so now I'm kind of like taking that big leap now. Now I got to convince them
Mhm.
that with whatever capital you guys have now that you've accumulated, that you've been parking waiting for deals, that deals will be there, but multifamily would be the best way to go. Then you want workers hard,
Right, right,
on the single
and
family
that's
side.
what was attracted to me is the risk mitigation. So instead of owning a building that's like $250,000 and you're just hoping to get your 1K, your 2K a month, whatever it is, out of it, like that takes a long time to get your money back. And if you can, use that same amount and get a piece of a commercial building, then like two tenants move out, you're not at zero per month, and in the red because you're paying for mortgages on two places, or at least
Sure.
leases on two places. It's scary stuff. But anyway, so there's definitely a risk involved in real estate. I don't know if you've heard that before, but in this show, I like to do a tolerance for risk assessment. So, Deepak, my fill in the blanks question to find out your tolerance for risk is: there are many popular investment asset classes, but I think blank is too risky. It can be real estate or non-real estate. What's too risky for you?
Well, I think office buildings right now is too risky.
Hmm.
One is, a lot of people were, used to working from home, but obviously I want to come back, but some of the companies are already downsized.
Hmm.
So their need for office space has decreased.
Hmm.
It used to be, back in the day when everything was good, you know,
Yeah.
office space was, you couldn't go wrong with office space, and even even warehouses you couldn't go wrong with.
Hmm.
But then we know, like with Amazon and all those guys, that they're also cutting back on their warehouses, that they've been contracting out as well.
Right. Yep.
So anything along those lines is going to be a lot riskier than having any other single family or even a multifamily.
Hmm. Yeah, I was telling my wife today about how Google's laying off like 15,000 people, and she said, "Oh, I thought that was like last month." No, 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 that was Amazon last month. But right now, the news is that Google's now doing it too. So yeah,
Well, yeah,
it's
right. So right now with the recession, every sector
oh yeah,
has been hit.
yep,
And now in California, I don't know if you're aware, but part of California where they had, the rent forbearance where the tenants didn't have to pay rent.
right,
So any of those apartment owners that had those tenants,
right,
there were a
right,
good percentage of tenants that weren't paying rent,
right.
even though they could pay rent.
Yeah, yeah. Well, that's the thing too. That's I think it's quite problematic. Is like even the way that it's framed is not very good. They use terms to compare the different states, like landlord friendly and tenant friendly.
Yeah.
But the problem with those terms is it has certain things implied. The biggest one is what I would describe as a landlord friendly state would be one that actually allows you to make the rules on the thing that you've bought. Okay. And the opposite one is saying is like, okay, even if you bought it, we're putting these restrictions on you as far as, like on what circumstances you're allowed to evict. And so like that's anybody who's been in any sort of rent sort of situation, it's just go ahead and ask them about some of the horror stories because it's we're the big flag on top of the hill landlords as far as the most visible people, where it's like okay, well that person has money, but like everybody else kind of hides it except for in Silicon Valley and Wall Street, right? But
No,
anyway.
definitely, right. So like I said, every sector has been impacted, with this recession.
Hmm. Hmm. For sure.
And I think in multifamily, if you have, the right mix of tenants,
Hmm.
um, you might be able to weather it better than a single family owner,
Hmm.
where
Hmm.
you got a tenant that can't pay the rent and you can't evict them.
Hmm.
Um,
Excellent, excellent. So, but back to commercial real estate and how it works. If you go to dandoesdeals.com, then you can download and print out your own copy of the Core Competency Cube. And I don't even ask for your email address, which is a terrible idea. From a marketing perspective, you should always ask for contact information in return for the freebies. But I don't, because I actually want you to print it out. I want you to practice it, because if you're going to have a future in this industry, you got to learn how to effectively communicate about it. Okay. And I noticed everybody's called an investor in this business, and that's about as clear as mud. So I think this one really clears it up in 6 different roles. And I go through the all 6 sides of the die in every episode of Chance Encounters. It takes 2 minutes, and that way you know how my guest fits into these deals. So first, let's talk about repositioners. Repositioners are people who, we got tons of glare going here. Okay, there we go. That's my angle. They look at a lot of different properties and they do all the paperwork. And what are they looking for? Well, when they are looking through the numbers, they call that underwriting, and they're making sure that, first of all, that the price, like the building, is making the amount of money that the seller or the broker is claiming it is, and then they're figuring out how can they reposition it, aka change around. Do they need to renovate? What are they going to do to make more money than the current property is making? So the first place they're going to look, every repositioner is going to be networking with financiers, who are people who are purely dealing with paper and money and no work. They're not allowed to be actively involved in it. These are the banks and people like that. So if you have more advantageous lending, that's automatically a more profitable business. But if the repositioner can't find enough financiers, then the first place they'll look is the operations. Make sure that those Benjamins aren't just rolling, just going down those toilets. But of course, operations are sometimes the asset management rather than the property management. They outsource the property management to a company that focuses on that. But then you have to figure out, well, how are we going to deal with this particular vacancy issue? Like we can't find, we can't get it up over 90 or something like that. That is where marketing background comes in, and that's one of my fortes. And then the other thing is automation is what I bring to the table. But often operations aren't going to be able to make a huge difference to the bottom line. So when the repositioner is looking for upside, the next place they're going to look is the contractor team. They're going to do a value add, or they're going to do the renovations on the units so that the new tenants will be happy to pay more in rent than the previous ones, because it's a nicer place. But it's a kind of dangerous proposition doing contractor teams and doing value adds, especially if you're from the internet like me. And so as a result, if you're going to be doing this sort of stuff, you're going to need a local, you're going to need boots on the ground who can be there in an hour or so, because that's not going to be me. I'd be stuck on the internet. No, I'd be stuck at the airport in that amount of time. But anyway, when you have the team, that you have the local, you have the operations team, you're the repositioner, presumably the contractor team and all that kind of stuff. You turn around to the financier and you say, hey, I got this really sweet property and it's only tens of millions of dollars. Do you happen to have tens of millions of dollars that you want to lend us to pick this up? And the financier is going to have one question on their mind, like the bankers, that I haven't addressed, which is, who's your sponsor? Okay, so if you have a bunch of pals in IT or whatever else, and you want to pool your resources and take over an apartment complex, that's fine. But if you want to be eligible for a commercial loan, then somebody in the fold has to already own a similar asset. Okay, so if you want to buy a 350 unit apartment complex, somebody in the fold needs to already own a 350 unit apartment complex. And then you need a certain amount of liquidity. Then you need a balance sheet among the owners of at least the amount of the loan. But you put all that together, and you got yourself a commercial real estate deal. So, Deepak, after all that, you mentioned that you're a capital equity partner, so that means you're definitely interacting with the financiers and you're a financier yourself, and then everybody is to some degree a repositioner. Would you also say that you're doing asset management, or like how do you fit on as far as your next deal goes?
Well, since I am in California and I'm looking in Texas, I will definitely need to have some partners in, in that region to
Mhm,
have the boots on the ground, so as you say, right?
mhm,
But then I also, it's a 3 hour flight from California to there, right? So, I mean, to go, well, once a month or something like that, that's not not a problem to visit the property just to, make sure that it's being managed the way it should be,
mhm,
whether we have a on-site property manager, or, management company.
mhm,
So obviously that's one of those things that, I can do.
mhm.
Um, and yeah, and like raising capital is one of the things that, I need to brush up on. I mean, I do have people with capital to lend,
Mhm.
but again, the deal has to be right. The property has to be, make sense
Mhm.
for that, for that venture.
All right. All right. Excellent then. And so then just to get an even finer point on it, we always go through the buy box on this show, and when commercial syndicators, investors, buyers, sellers, all that kind of stuff, when they're asking about what is your ideal property, they're really asking for three things. First one's geography. Okay. So where is it? Okay. So which state, which county, possibly even which neighborhood. Okay. That's all going to matter. The second one's going to be size, and we're talking about multifamily here. And if you're talking about multifamily, then we're going to be talking about unit counts, okay? Because you're going to have different types of teams taking down a 15 unit apartment complex compared to a 150 unit apartment complex, right? So that size definitely matters. If you are going to be talking about warehousing or something like that, it'd be square footage, but unit count will suffice. So the third one though is called class, which unfortunately they're two different things that are often called the same thing. What can you do? But the two definitions, the first meaning of class, it has to do with the condition of the building, aka like how old is it? Like is it old and is it beat up, or is it like up to date, or is it very luxurious with all sorts of amenities? Okay, that's one version of class. Now the other version of class, it is also called area sometimes. And when they're talking about that, they're saying is like, okay, well, what are the school districts like? What's the crime rate like? Like how close is it to the interstate? Things like that. And both of those two categories are both called class, but they're rated the same as in grade school. So A plus on top, and then A minus and B plus and so on. So Deepak, as far as you guys go, what deal is easier to say yes to and more difficult to say no to?
So I'd be, looking. So the property that I'm already a LP in is a Class A, just outside of Houston.
Mhm.
But I'm looking at least Class B, and anywhere from 40 to maybe 100 units in size. The one I'm an LP in is a 48 units, so anywhere between 40 and 100, or maybe even 150.
Mhm.
Also at, a fairly good location, close to any of the metros, uh, and obviously school wise, good schools. But yeah, I'm looking at mostly Class B.
Mhm. Mhm. Okay. All right, cool then. So then the next question then is about people. And the thing that I think is really amazing about commercial real estate is because it's multifaceted. Everybody is so eager to help people build their teams. But at the same time, we all have our own unique skill sets. Deepak's also in IT, and really we can make a bigger difference to some people. So these days, I'm interested in finding more repositioners, of course, and then the sponsors are great because that way usually I can pair up with them and do some things on social media and so on. But that's who I'm up to. And but as far as you go, Deepak, don't, if you have any 506B raises going on, you're not supposed to entice investors. So if you have any like I don't know, candies or chocolate or something. Don't like wave it in front of the camera or whatever. But if you only do 506C, then you can say whatever you want. But who you looking for? You can say beginners too. That's the other kind of catch-all.
Yeah, so when I'm looking at a couple of deals right now, but obviously I can't say it, but I do want to work with everyone, so I have to do like a 506B. I know there's a lot of people out that I know, they say that, yeah, I don't have any cash to invest, but they may know people that would want to invest. So I kind of want to also have them as part of it, part of the deal. But so again, once I find something, then, obviously I'll have to figure out how I can, get them at least get their feet wet that they'd be willing to invest in a future deal.
Great,
But
great. So when
uh,
they reach out to you, then they can remember to say that they saw you on your chance encounter, right? And speaking of which, as far as how to get a hold of you, I got this distinct last name, so I'm easy to find, especially on LinkedIn. LinkedIn is the best way to connect with me, follow me, all that kind of stuff. Reach out. But if you scan this code right here with your phone, that'll go to the FAQ page of 506B Me up there. This is more awkward than it looks. It actually looks kind of not weird, but it feels super awkward. But anyway, yeah, if you go to 506 BME's FAQ page, it talks about how I can be your chief compliance officer for a low cost each year, depending on what you need. But as far as you go, Deepak, what are the best ways for people, syndicators in the audience to reach out to you?
yeah, I am on LinkedIn, and my face is also there on the profile, so you can get me mixed up with other DPACs. And you'll also get me by email, which is dpack@rdmgroupinc.com.
All right, awesome. And then the only thing that's left then, it's actually not for you, it's actually for you in the audience, which is it's a public service announcement. If you've been watching this and having these like searing, piercing feelings in your eyeballs and these, like kind of migraine like thing in your head, then it's probably because like under my hand here, there's this hideous red button. It says subscribe on it. And it really should be the gray one, not the red one. Okay. And the only way to get rid of that, like, it's bad. Okay. Like, if your kids see the button over your shoulder, they'll be like, I thought I knew you. Ugh. Okay, so you gotta hit the button, and it's free. It doesn't cost you anything. Like, I like it when people do it because it means that YouTube might actually start paying for these videos instead of me. But it doesn't cost you anything, and it just means that these videos might show up on your list of suggestions. But you can go ahead and ignore those suggestions because I just appreciate the fact that you spent this time with me. Just like Deepak, I appreciate you joining me today. This has been great getting to know you a little bit better.
Yeah, been my pleasure, and I already subscribed to your channel, so
Yeah, you want to be
I'll
like
give you my
him.
shameless plug.
That's awesome. Thanks, man.
Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.